Hello and welcome to our channel. To our returning viewers, thank you for coming back. To all our new viewers, we hope you like what you see. The recent correction has made many investors rethink their investments, including in mutual funds. So I thought it's a good time to review major large cap funds that many investors are exposed to try and figure out what's happening in the funds and what we can gauge of their futures. In this video, I'm going to compare and contrast the flagship large cap mutual fund products of India's three largest AMCs. I'm going to compare and contrast the three to understand the differences among them and figure out how each of them has been positioned for the future. As always, nothing in this video or on this channel is investment advice, nor a recommendation to or not to buy, sell or hold any security. This video is for information purposes only. We're happy to partner with the Zerodha Media Network to bring you interesting and useful insights and information from the world of business and investing. So go ahead and like, subscribe and hit the bell icon. The three funds I'm going to discuss are the HDFC Large Cap Fund, the ICICI Bluechip Fund, and the SBI Bluechip Fund. I will begin with a combined overview of the three before discussing each of them individually. I will, of course, point out key areas of overlap and differentiation among the funds along the way. The good news is all three funds have been around for a long time, giving us several years worth of data. ICICI Bluechip is the relatively young one among the three, with its inception in May of 2008. SBI Bluechip is a couple of years older than that. HDFC Large Cap is the grand old man, with its inception all the way back in October of 1996. As you can imagine, they are also three of India's largest individual mutual funds. ICICI Bluechip is the largest among the three, with an AUM of about 60,000 crores, followed by SBI Bluechip at around 46,000 and HDFC Large Cap at 34,000 crores. I always enjoyed Venn diagrams in school, so I'm going to use them to give you an overview of the funds before we dig deeper into each of them. Across the three funds, we have a total universe of 98 unique stocks. Now, one of the standard criticisms of large cap funds is that they all broadly resemble each other and are essentially index huggers designed to justify their existence with marginal outperformance versus the index. You may, however, be surprised to learn that 53 of the 98 stocks are held in only one of the three funds. Amazingly, 30 of ICICI Bluechip's holdings are unique to that fund and not held by either of the other two. I was genuinely stunned when I saw this. It is incredibly difficult to have such a differentiated portfolio in the large cap space. ICICI Bluechip does, however, have a significantly larger portfolio in terms of number of holdings compared to the other two as well. It has 68 stocks versus 43 and 45 with HDFC Large Cap and SBI Bluechip respectively. About a third of the stocks in our universe are held in two of the three funds, with the most overlap between HDFC Large Cap and ICICI Bluechip. 13 of the 98 stocks are held in all three funds. As you may have guessed, these are the usual suspects, including HDFC Bank, ICICI Bank, Reliance, L&T, Infosys. This consensus is also interestingly in the larger positions. And this is a really important point to remember, as we'll get to later. These 13 consensus holdings have a disproportionate weight in each of the three funds. In SBI Bluechip, they account for over 51% of the AUM. In ICICI Bluechip for over 54%, and more than 57% in HDFC Large Cap. You may not be surprised to learn that HDFC Bank and ICICI Bank are the top two positions in all three funds. You can see why people level the lack of differentiation criticism. But to truly appreciate the differences among these funds, you have to pay closer attention to the long tail. To do that, I'm going to break down each of the three funds in detail so you get a much better sense of how these funds are positioned for the future. Let's begin with HDFC Large Cap. As I mentioned before, HDFC Large Cap has 43 different positions accounting for 99.5% of the AUM. As you will see later in the video, this makes it the most invested in the market among the three with the least cash held. The obvious first point of note in HDFC Large Cap is the weight of banks in the portfolio. It is the only one of the three funds that is overweight banks compared to the Nifty. And it owns all 5 of the largest private banks and SBI, with these 6 positions accounting for 32% of the fund. How long they continue to own IndusInd Bank, though, remains to be seen. This is not entirely unexpected, as many investors hold the view that large banks are one of the few pockets of value in the market. Its second largest industry by holding weight is IT, where it owns the 3 largest IT companies. The other industries representing over 5% of the AUM are automobiles, pharma, construction, and telecom. All in all, they own companies across 25 industries, which is quite a bit considering they own 43 stocks. There are a couple of sectors where there is meaningful divergence from the Nifty. The first, of course, is IT, which accounts for less than 10% of the fund versus over 14% for the Nifty. The other is petroleum products, which really boils down to Reliance, where it has allocated 4% of AUM versus 8.5% for the Nifty. Now, all this is factual data that the fund presents. The real question, though, is what do these 43 positions tell us about the fund's view of the future? Clearly, they have a more favorable view of banking stocks compared to their primary peers and the benchmark. And with the benefit of hindsight, we have the luxury of sitting on a high horse and criticizing them for being the only one among the three to own IndusInd Bank. I should add that all the data pertaining to holdings in this video is as of the 28th of Feb 2025, when the last portfolio disclosures were made. As I mentioned earlier, the larger positions are actually not the interesting ones for these funds because they are largely consensus holdings. So the real differentiation comes in the tail. There are 9 stocks that are owned solely by HDFC Large Cap. These are Titan, IndusInd, Zomato, Tata Consumer, SRF, Dabur, Havells, DLF, and Bajaj Housing. My guess, though, is Bajaj Housing won't last much longer in the fund. Another major point to note is the lack of cash. The fund has just 45 basis points of AUM as cash and equivalents. Therefore, in order to capitalize on any market opportunities and inefficiencies, they must first sell an existing position or positions. There were, of course, a few positions that caught my eye. The first is Zomato. It appears that of the 3 funds, they are the only one that doesn't believe the price reflects all the upside around quick commerce and food delivery. Another standout is Hyundai Motors, one of the largest IPOs in Indian history. At the time of the IPO, many commentators had pointed out the difference in multiples assigned to the Indian arm and the parent in its home market. Interestingly, SBI Bluechip is also an owner of the stock. 2 sectors where HDFC Large Cap is overweight compared to the other funds is consumer durables and power. HDFC Large Cap has almost 3% in consumer durables, represented by Titan and Havells. As I mentioned earlier, both of these stocks are unique to HDFC Large Cap. On a side note, I am eagerly tracking Titan and seeing how the landscape will evolve over coming years with the launch of Birla's competing brand, Indriya. HDFC Large Cap has a 5% allocation to NTPC, twice the power sector allocation of the Nifty, in fact. A major area the fund is underweight is insurance, particularly compared to the other funds more so than the Nifty. In fact, it owns just one company in the space, SBI Life, and that too a measly 39 basis points of allocation. For comparison, ICICI Bluechip and SBI Bluechip have 4 and 3% allocations to insurance companies. Some important data points before we move to ICICI Bluechip. HDFC Bank and ICICI Bank together comprise just shy of 20% of the fund. The median weight of a holding is just 1.44%, with over a third of the holdings having a holding weight of sub 1%. ICICI Bluechip is probably the most interesting of the three funds, simply because it is the most different. 30 of the 68 holdings are unique, and the fund holds over 8% of its AUM in cash and equivalents. I'm not going to list all 30 unique holdings, of course, but some noteworthy ones include Interglobe, Asian Paints, Wipro, Union Bank, and Bank of Baroda. Not only does ICICI Bluechip have the lowest weight held in banks at just 23% of AUM, it is also the only fund to own any PSU bank other than SBI, and in fact is the only one of the three that doesn't own SBI. The fund is underweight banks compared to the Nifty by almost 7 percentage points. That is a really, really significant differentiator. It owns just 5 banks: HDFC, ICICI, Axis, Union Bank, and Bank of Baroda. HDFC and ICICI together account for 18% of the fund, and Axis is the 8th largest position. ICICI Bluechip is also meaningfully underweight IT, with less than 8% of AUM in this sector. But it does own all 6 of the largest players in this space in India. Interestingly, across all 3 funds, the single largest individual IT holding is actually Infosys. I want to draw your attention to 4 sector allocations in ICICI Bluechip that I think will be critical to the fortunes of the fund. The first is the overweight position in auto, which accounts for close to 10% of the fund versus about 7.5% for the Nifty. Conspicuous by its absence, though, in the fund is Eicher Motors, which has been a darling of the market for many years and one of the relative outperformers in recent times. Both HDFC Large Cap and SBI Bluechip own the stock, and SBI Bluechip in fact has an over 3% allocation. The next major point of differentiation is the under-indexation on FMCG. The fund's sole allocation to this space is ITC at 1.8% of the fund. For comparison, HDFC Large Cap has a 4.6% allocation, SBI a 5.6% allocation, and Nifty a 6.5% allocation. Clearly, the folks at ICICI Bluechip have a less than favorable view of these high PE, low growth stocks. The third industry allocation I will point out is cement, where the fund has a major overweight position with a 5+% allocation compared to just 1.25% for the Nifty. Both HDFC Large Cap and SBI are at roughly 1.5%. The final industry I want to draw your attention to is finance, which is basically the NBFC sector. ICICI Bluechip has just one tiny holding here, Muthoot Finance. It's worth noting here, though, that all 3 funds have been unbelievably picky about their NBFC holdings. Interestingly, the primary, and in SBI's case, the only NBFC holding for the other 2 funds is Cholamandalam. I wonder if the more important takeaway from this exercise is the lenders that are not in any of the portfolios. Or maybe I'm just reading too much into it. The average holding in the fund is just 1.4%, and the median holding is an incredible 0.7% of AUM. Despite them owning 68 stocks, the top 9 account for over 51% of the fund. There's diversification, and then there's diversification, I guess. And last but not least is SBI Bluechip. It is between HDFC Large Cap and ICICI Bluechip in terms of cash held, with about 5.5% in cash and equivalents. Like ICICI Bluechip, it has roughly 18% of the fund allocated to HDFC Bank and ICICI Bank. SBI Bluechip has 14 unique holdings, most notably Divi's Lab, Britannia, Thermax, Samvardhana Motherson, and Sona Comstar. Like ICICI Bluechip, this fund is under-indexed on banks, but it does own all the same banks as HDFC Large Cap, with the exception of IndusInd Bank. Like its peers, it is also underweight IT companies compared to the Nifty. Somewhat interestingly, it is the only one that doesn't own HCL Tech. SBI Bluechip is the only fund among the three that does not own Coal India or any oil or consumer durable stocks. For the fund to outperform its peers, it will have to rely on three sectors primarily among its holdings. The first is food products, represented by its over 3% holding in Britannia. The next is textiles, represented by its holding in Page Industries. And finally, and most importantly, is auto components, where it has a huge overweight compared to its peers and the Nifty. The fund has allocated over 4% to this industry. Neither of the other funds nor the Nifty has any allocation to this space. Don't forget on power as well. SBI Bluechip is seriously underweight this space with zero allocation, another major differentiating factor. Just to put a bow on SBI Bluechip, the average holding for the fund is 2.1%, but the median holding is 1.24%. 38 different industries are represented across the three funds. Therefore, they function essentially as cross-sections of the Indian economy and are ultimately reliant on a growing economy. At this time, it is useful to bring in the Nifty into the discussion, although I should add that all three do use the Nifty 100 TRI as their primary benchmark. 11 of the Nifty 50 stocks are interestingly not represented in any of the three fund portfolios. These include the Bajaj Twins, Trent, and Adani Enterprises. The Nifty is significantly more weighted towards the banks than ICICI Bluechip or SBI Bluechip, but less so than HDFC Large Cap. The Nifty is also much more indexed on Reliance, IT, NBFCs, FMCG, and metals than the funds. But here's the most important takeaway from this exercise. Large cap funds are not all built the same. There are serious differences among them. It is actually more important to track the tail than the large positions to gauge the scope for outperformance versus the index and peer funds. After a long time, India has truly become a stock picker's market. And at such times, the most important decision investors must take when choosing funds is which stock picker they select. I will leave you with an interesting fact that may confuse as much as it helps. Since the respective inception dates of the three funds, in ascending order of age, the Nifty 100 Total Return Index, which is the primary benchmark, has given returns of 11.1%, 12.5%, and 13.7% respectively. But what are the returns since inception of ICICI Bluechip, SBI Bluechip, and HDFC Large Cap respectively? 14.5%, 14.8%, and 14.4%. Let me know what you think of each of these funds and their futures in the comments. Thanks for watching.